We know that Dr. Macmillan has a very interactive style. So from time to time, he will engage you. If you wish to speak, please click the reaction button that's at the bottom and select the raised hands. If you are shy, you can send a message to the group chat to someone, and to everyone, and we'll read it for you. To minimize noise interference, we're gonna ask that everyone keep their microphone on mute when you're not speaking. And finally, the session will be recorded for the benefit of your colleagues who are unable to make it. And therefore, after the event, we will share that recording with everyone in attendance. And I believe it will be also posted on our social media platforms. So on to the program. So in terms of program flow, we'll first have our president, Brian Fraser, bring us brief opening remarks. But thereafter, we will transition into the interactive session with Dr. Macmillan. So without further delay, I want to go ahead and introduce our president, Brian Fraser. Brian plays an integral role in the financial sector, as he's also a member of the Caribbean Association of Alternative Investments and a director of the Pension Association of Jamaica. Brian, over to you at this time.
Okay, thanks, Narisha. Good afternoon and welcome, everyone. We're actually delighted to have you today at this virtual ethics workshop under the theme, Ethics Matters, Let's Measure Up. And this is put on by the CFA Society Jamaica and endorsed by the Jamaica Securities Dealers Association. This is our second year hosting these workshops, and pretty much similar to last year, this is one of 3 workshops that we are putting on under the same theme. However, it is directed at different target groups. So yesterday, we had the first webinar, and that was with pension fund trustees, and that was in collaboration with the Pension Industry Association of Jamaica. And then tomorrow we will have the final workshop, and this one will be with just regulators. Now, while most persons may be very familiar with the CFA brand, based on the exam about the CFA Institute or the CFA Society of Jamaica, as such, I'll just briefly tell you about CFA Society of Jamaica, who we are and what we do. And our guest speaker, Dr. Macmillan, who is from the CFA Institute, he will tell you a little bit more about CFA Institute during this session. However, I will say that CFA Institute is a global community of investment professionals, and we work to build an investment management industry where investors' interests come first, financial markets function at their best, and the economies grow. CFA Institute have over 175,000 members and over 150 member societies worldwide. CFA member societies are independent bodies formed by local members or local charter holders like myself and Narisha and Mr. Miller. CFA Society Jamaica is an association of local investment professionals consisting primarily of portfolio managers, securities analysts, investment advisors, and other financial practitioners. Our members work in a variety of areas across the sector, the financial sector, including corporate finance, which is the new sector locally, investment banking, compliance, risk management, investment management, and that is just naming a few areas. The mission of CFA Society Jamaica is to lead and serve the investment profession locally by promoting the highest standards of ethics, education, professional excellence, and best and the wider society. The commitment to professional ethics is something that is at the core at what we do. And as such, this is the main reason why we have invited you to this webinar on ethics. Although today we're focusing on ethics, I thought that it would be a good idea to just look at the topic of investor trust briefly, because both we believe go hand in hand. And as such, I want to bring to your attention some findings from the recent CFA Institute 2020 Trust Survey. Janelle will share my screen. I have a technical difficulty, so we should have the slides up. And just to note, CFA Institute began studying the issue of investor trust from back in 2013, and this is actually the fourth trust survey. A very interesting research paper by the Institute. The main purpose of this study is to understand how investors view investment firms and investment professionals. And as we know, trust is a factor that is in most relationships. And the other thing is that it is very difficult to quantify. So this survey will try to help us drill down into this a little bit more. Go to the next slide. First thing I'll share is that the survey shows that trust is actually the number one factor considered by retail customers when selecting an investment manager or asset manager or an investment advisor. There, it is followed by the ability to achieve higher returns, and then third place to achieve lower fees. And this is how retail investors view the issue of trust. The next slide, we look at industries, how investors perceive different industry in terms of their trust level. And we are seeing where medicine, technology, food and beverage, and law are among the highest in terms of trusted industry. Our industry, which is financial services, along with automobile, fall in the middle of the table. And the good news is that we have seen an increase in the level of trust in our industry, and we are seeing where telecommunications, entertainment, media, and government are the least trusted industry. The next slide shows, how investor trust vary from market to market and from countries to country. We don't have the data for Jamaica, but we are seeing where the lowest levels of trust is in places like Australia and Japan and Singapore, while the highest level of trust is in India and mainland China. If I were to guess, I would believe that our average would be in and countries. If we go to the next slide, we also see that trust levels varies across professions, and we will notice, similar to the sentiment that we saw for the industry, how investors relate to different industry in terms of trust level. We are seeing where doctors, in terms of profession, are the most trusted, while financial advisors and mechanics are actually we're actually round about the same. We're trusted round about the same by by the typical investors. I'm not so sure that that's a good or a bad thing. I rank pretty much in the same level as the mechanics in terms of the amount of trust the investors place in us. And at the bottom of the table, we can see again the politicians. We are seeing that distrust in politicians, which is similar to when we look at the industry, where government is seen as one of the least trusted industries. Next slide is just that, another important topic that we saw was that the trust level for the financial industry by retail investors is actually higher if the investor have an advisor or if they have more information available to them. So that is what this table is saying, showing the trust level from this slide is that our role as investment professionals contribute significantly to the way to the level of trust that investors have in our industry. So we have to take our role very seriously because it have a significant impact on the level of trust of our industry. That's my last slide, but just some other notes from the survey that is worth noting is that we have seen where the use of technology by investment firms is now something that increases investor trust. And we remember from the initial slide, technology is one of the industry that is among the highest in terms of trust levels. So the use of technology by investment firms, obviously providing customers with more ways to better sell themselves, as well as to inform themselves, as well as to view their accounts, and those type of things. It actually increased investor trust. Also, what we saw coming out of the survey was that in times of crisis, the issue of trust is actually more important to investors. As such, during this current crisis, it is critical that we as investment professionals put investors' interests first as we help them to interesting points in the trust survey. However, in the interest of time, because Narisha stressed that brief remarks, I will stop here. However, persons interested in the full report can just let us know and we'll provide them with a copy. The bottom line is that we know for sure that ethics and trust are important to our investors. And as investment professionals who serve clients, those items or those factors should also be important to us. CFA Society Jamaica arranged this seminar so that we can delve deeper into the topic of ethics in a very practical way. I would like to close by highlighting once again that promoting ethics and high profession done by CFA Society Jamaica, and as such, we will continue to host events such as these. Although Dr. Macmillan is not here this year with us in Jamaica, we're still happy to have him doing this workshop virtually, and I encourage you to participate and engage in during the session. And before I hand back over to Narisha, I just want to say once again, welcome to this ethics seminar. We're delighted to have you, and we hope that you enjoy the rest of the session and the rest of your afternoon. And please continue to keep safe. Thank you. Back to you, Narisha.
Thank you so much, Brian, for ably walking us through the ethical landscape and, painting a picture of how ethics plays an important role to us as investment professionals as we carry out our fiduciary duties to our clients. So thank you very much for that. At this time, it's my pleasure to introduce to you Dr. Macmillan. Dr. Michael Macmillan joined the CFA Institute in October of 2008 after more than a decade as a professor of accounting and finance at Johns Hopkins University, Carey School of Business, and George Washington University School of Business. Prior to pursuing a career in academics, he was a securities analyst and a portfolio manager at Baylard Capital Management in San Francisco, California. As the Director of Ethics Education, Dr. Macmillan is responsible for creating and developing educational content for CFA Institute members and investment professionals in ethics and professional standards. He's also responsible for providing ethical decision-making workshops to pension plan trustees, investment professionals, regulators, and university students. Dr. Macmillan has a PhD in accounting and finance from George Washington University, an MBA from Stanford University, and a BA from the University of Pennsylvania. He's a chartered financial analyst, a certified compliance and ethics professional, a certified investment counselor, and a certified public accountant. There is much more that I can say about Dr. Macmillan. However, in the interest of time, I will hand over to Dr. Macmillan. Just before I do so though, for those who came on after the initial introduction, just want to remind you that this is a very interactive session. As such, you're encouraged to participate by either clicking the reaction button if you have a question and place it there. One of the facilitators will identify you. If you're shy and don't want to speak, you can place a message in the general chat box. Okay, so over to Dr. Macmillan. Enjoy, everyone.
Okay, and thank you very much, Narisha, and thank you, Brian, also for the introduction. Let's see if we can get my screen. Everybody see my screen? Great. Okay, good. Thank you very much. I am happy to come to you via Zoom. However, I'm not doing this again unless I can come to Jamaica and do it in person. I had such an enjoyable time last January when I was there, meeting many of the pension trustees, professionals, and regulators. As good as Zoom is, it's still not the same as being there in person. So today we're going to talk about ethical decision-making, and this is how this workshop will differ from what you might expect. On the CFA examinations, 10 to 15% of all of the questions on the CFA exam pertain to ethics. That means that every ethics question has one right answer and two wrong answers. But as we all know, ethical dilemmas don't have correct or right or wrong answers in many cases. They fall within that gray area. So this afternoon, I'm going to put you into a series of real-life ethical dilemmas that investment professionals have told me they have faced. And then I'm going to give you an opportunity to vote anonymously on what you would do if you were in a similar situation. We certainly welcome all comments and questions, so please do not hesitate to say anything that you'd like, because it makes the whole workshop a much more fulfilling and richer experience. So here we go. First thing I do want to touch upon is the mission of the Institute. And one of the reasons why I want to mention this mission is because we actually revised it in 2008 after the global financial crisis. Prior to the crisis, our mission was to lead the investment profession globally by promoting the highest standards of ethics, education, and professional excellence, period. Then 2007 and 2008 came along. And as you know, as a result of the financial crisis, there were many people who lost their jobs, even more people who lost their homes, and even more people who lost their life savings. And we began to think about this at CFA Institute, and we thought that if we could raise the educational level of investment professionals in our industry, and if we could increase the ethical behavior of investment professionals in our industry, this would ultimately benefit society. So that's why we added that last line in our mission statement, for the ultimate benefit of society. So, as Brian mentioned, we are a global organization. We have 158 CFA societies around the world. There are currently 184 CFA Institute members. And I just want you to take a look at our candidate pool. As of 2019, there were more than 350,000 people globally who sat for the CFA exam. And one of the reasons why growth in the CFA program and the growth in our candidates remains strong is basically because of the ethical component in our program. As I mentioned, at each level of the CFA exam, ethics represents 10 to 15%. And as CFA charter holders, Narisha, Hugh, Brian, and myself have to sign an annual statement every year saying that we have lived up to and upheld the CFA Code of Ethics and standards of professional conduct. So when employers are looking at candidates to hire, they do prefer hiring a CFA charter holder just because they have additional comfort that, one, we've studied ethics, and two, every year we commit to following a code of ethics as well. But enough of that, let's get to the main part of what we're here to talk about. This is how we define ethical behavior at CFA Institute. It's doing the right thing when no one else is watching, even when doing the wrong thing is legal. And that's the thing about the global financial crisis in 2008. So many of the activities that precipitated the crisis were legal. They weren't ethical. And as you probably know, there really is a difference between the law and ethics. The law is the minimum standard that we all must follow. The law tells us what we can and cannot do. Ethics, however, represents a much higher standard, and ethics focuses upon what we should and shouldn't do. And the problem in our industry right now is there are a lot of things that we can do that are legal. They're just not ethical. So this is how we define ethics at the Institute. Ethics begins with education. Investment professionals, of course, need to understand investment markets, finance, economics, etc. In addition, investment professionals need to know the laws, rules, and regulations in the countries or jurisdictions in which they're doing business. So ethics has got to begin with education. Now, as Hugh talked about earlier, ethics requires trust. And as he so eloquently said, trust is earned, not given. So if we want to build a relationship with our clients, we have to earn their trust. Ethics also requires integrity, honesty, integrity, character, and this last one is stewardship. We talked about, Hugh showed a slide about doctors. We trust doctors. Think about the last time you went to a doctor. You went there because you weren't feeling well or something hurt. You went into the doctor, you told him or her what was bothering you. They in turn asked you a series of questions and perhaps gave you a checkup. At the end, they sat you down and they said, this is what you need to do to get better. Think about that. As you were sitting there listening to that doctor tell you what you needed to do, was there ever any doubt in your mind that that doctor was telling you to do something because it was in your best interest? That's what we mean by stewardship. We entrust our health and body to our doctors, and in return, we expect them to carefully and manage our health solely in our best interest. As investment professionals, we are stewards of our clients' money. They are entrusting their money to us, and in return, they expect us to carefully and responsibly manage their money solely in their best interest. So here's a quote that I modified from the COVID-19. Warren Buffett said, only when the tide goes out do you discover who's been swimming naked. And I modified it to say, only when the market declines do you discover the true risk of investment products. And that's what we've observed over the past couple of months as we've seen markets decline and become very volatile. Many investment products have declined precipitously and don't seem that they're going to come back. And that's what happens when you have a financial crisis. You can really separate those products that are good versus those products that are bad. Here are a couple of lessons I've learned from COVID-19, or a couple of takeaways. For investment professionals, financial planning and financial preparation are as important as asset allocation. So it's important to talk to your clients, of course, about whether they should invest 40% in bonds or in stock, etc. But as important is, are they planning for the future? Are they prepared for market declines or economic periods where there's a recession? It's important for us when we talk to our clients to focus more on the risk or the downside of an investment, as opposed to just focusing upon the potential or the expected return. Focusing upon risk is going to help you as well as the client in volatile time periods like we're experiencing right now. Greater focus on liquidity. Cash is and will always be king, regardless of the low returns it may generate. Equities are long-term investments. Their minimum holding period should be at least 5 years. Take what's happening right now. We don't know when the global economy is going to start growing again. We don't know whether the financial markets are going to come back. Those who have taken a long-term perspective when they are investing in equities are fine. But those who invested in equities who need the money in 1 or 2 years may be penalized because they have to sell those stocks before they have rebounded. Clients must understand the features and characteristics of their investments. And as an investment professional, you are responsible for making sure that they have an understanding of what they own and why they own it. As investment professionals, we must have a greater understanding of the investment products and strategies that we recommend. And we also have a responsibility to question the assumptions underlying the product's expected return and its risk. So these are some of the lessons I have taken away from the pandemic and what has occurred in financial markets. All right, and investment professionals must not recommend any product that you believe is being promoted in a misleading or oblique or non-transparent manner. So let's get to the fun part of the workshop, and I'd like everyone using your phone, laptop, or iPad to go to this website, www.slido.com. All right, www.slido, and you can just spell it out, SLIDO.com, and then the password, the login is CFAJ, and it doesn't have to be case sensitive, and it's not case sensitive. So I'll give you a moment. If anyone has had any difficulty logging in, just let us know and we'll tell you what you need to do. Okay, how are we doing out there? Okay? Okay, so I'm gonna move on. And here's our first situation. It's a true story, and after you vote or whatever, I'll tell you what actually happened. So here's the situation. You're a boss who hired you and has mentored you for the past 3 years is being unfairly let go because of office politics. As the sole support of her family, she is concerned about finding another job. So a week before she's scheduled to leave, she places a stack of files on your desk and asks you to copy them because she will need them in her job search. The files contain research reports that she wrote, marketing presentations containing her performance record, and spreadsheet models that she created. So what do you do? A, do you copy the files? B, refuse to copy the files? C, only copy the research reports that she wrote? Or D, only copy the spreadsheet models that she created? So I'm going to give you a moment to think about it. Then I'm going to ask you to vote. What would you do in this situation? Okay, all right, let's go back to presentation. All right. I'll show you the results and everything in a moment, but yeah. Let's see. All right, I only see 20. We've got 53 people here, so please do vote. All right. All right. Good, 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 good. I'll go back. Let's go back. Okay. All right, so here's what we're gonna do. We are gonna talk about this case in a moment, but I have another case that's very similar that I want you to vote on as well, and then we can talk about both cases together. Is everybody with me on that? Okay, so here is the next case. Okay, now, sorry. All right, here's the next case. Your boss who hired you and has mentored you for the past 3 years is being unfairly let go because of office politics. As the sole support of her family, she is concerned about finding another job. For the past week, you have observed her making copies of the research reports that she wrote, marketing presentations that she made, and spreadsheet models that she created. She then places these copies in her briefcase before going home. When you ask her what she's doing, she tells you that she will need to show prospective employers examples of her work. So what do you do? Do you A, do nothing? Do you B, help her copy the files? Do you C, give her a thumb drive to use to copy the files using this thumb drive? Or do you D, tell her that you will send her the files after she leaves? So the voting is open. I'm going to ask you to vote. Okay, all right. So let's just see. Switch to polls. All right, all right. Okay. All right, they're coming in, they're coming in. Okay, all right, we got 24. We'll leave it at 24 for the moment. So here's the thing. In this particular case, 83 of you said do nothing. 17% said D, tell her you will send her the files after she leaves. Now, let's go back to our first example. And we see 100% of people would refuse to copy the files. So let's go back to our initial case and talk about this. This is where you get to participate. So for those of you in case A, why would you refuse, why would you refuse to copy the files? Someone volunteer. What's the issue here? Someone volunteer. Don't make me have to call on you. Why would you refuse to copy the files? All right.
Mike Loxley does want, oh, okay. Respond in the chat.
Okay.
Perhaps one of the persons who have sent a chat could just unmute and just explain the rationale.
Okay. So please explain your rationale. What's the ethical issue here?
Hi, good afternoon.
Good afternoon.
Um, so I think the issue is even though she did the reports and all the other stuff at
Right.
her previous job, they don't really belong to her. So she can't rightfully take them when she leaves.
Okay, you're exactly right. Everything that you do at an employer is the property of the employer. So what she's actually asking you to do is to help her steal company property. Is that correct?
Yeah.
Okay, but here's my issue. This is your boss. This is the person who hired and has mentored you for the past 3 years. This is the person who's being unfairly let go. This is the person who's the sole support of her family. How are you going to refuse?
uh, so I suppose there are multiple ways you could go about it. But in the end, that's the conclusion you'd have to come to.
Okay, I get it. I get it. Thank you very much. I get it. Now, let's go to the second case, and I'll tell you what happened, but let's go to the second case. Almost the exact same situation, but in this particular circumstance, 83% of you said you would do nothing. Why would you do nothing? Someone say why? Aren't, yes.
All the other options are aiding and abetting her to steal. So the next best alternative would be to report it, but that option is not there.
Okay, I get it. Thank you very much. You see, here's the whole thing that we found with these two cases, and I do appreciate your answer. Here's the problem with these two cases. In both situations, she wants to steal company property. In the first situation, when you're copying the files, you say you don't want to at least be involved in this, so you would refuse. In the second situation, many people are saying, yeah, you can go ahead and steal the files as long as I'm not involved in it. In both cases, you actually are involved in it. And whether you actually copy the files yourself or say nothing, when you see her copying the files, you're still aiding and abetting a theft. Is that right?
Yes, Dr. Macmillan?
Yes.
Right. Marie Lynn in the chat made an important point. She said that if she writes it in her own brain, she can reproduce. What's your thought?
No, and actually very, very much so. If you can, you cannot erase what's in your mind. So
That's right.
any research report, spreadsheet models or whatever, anything that you did at one firm, you can recreate from your mind at another firm. That is exactly right, but you cannot take physical material from the firm. Yes. All right, everybody with me? All right, so let me tell you, so these two cases, first of all, let me tell you what happened. In the first case, the person did copy the files because it's very hard to say no to someone who hired and mentored you because you feel some loyalty to this person. It's very hard to say no because you do believe that they're being treated unfairly, so you want to help this person. And in addition, this individual's the sole support of her family and she needs to find another job. So you don't really think about that you're helping her steal company property. What you're really thinking about is you're being loyal, you're being helpful, you're being, supportive. So in the real life situation, this person copied the files. They copied them, but they felt uncomfortable about doing it. A week after the boss left, this individual went and talked to the boss's boss and told the boss's boss exactly what they had done. And the boss's boss was not happy that this individual had copied the files, but could certainly understand the situation that this individual was in, okay? Now, the reason why I had you vote on this case as well as the next case, because it also shows sometimes how our minds view ethical dilemmas. Because basically the ethical dilemma in both cases is the same. In one situation, you're actively involved by copying the files. In another situation, you kind of turn your head around and you go, well, if I'm not involved, you can go ahead and take whatever you want. So this is what this demonstrates, or these two cases demonstrate. The first is that we make most of our decisions instantly and instinctively rather than rationally and using reason. So, we just said, no, we were refused, I just do nothing, without really seeing the similarity between the two situations. Secondly, we all tend to believe that we are more ethical than we really are. Lastly, we often make unethical decisions not because we are bad people, but because we're often affected by psychological biases, social and organizational factors, and situational influences. It's these things that can affect how we make a decision. So one important point I want to leave you with, not that I'm going anywhere right now, is this. There really is a difference between unethical people and unethical behavior. And most people who get into trouble are not bad people. It ends up that they're affected by such things as obedience to authority. I mean, how many times, when we're younger, we learn you obey authority, you obey your elders. So when your boss asks you to do something, we all have a tendency to do it without really thinking about the underlying ethical issues involved. We also have this conformity bias, meaning that we have this tendency to follow the crowd. We see other people doing something, we go, well, if they're doing it, so can we. Again, without really thinking about, well, what are the underlying ethical issues surrounding what all of these other people are doing? Incrementalism, that gradual slide down the slippery slope. Most fraud or embezzlement cases never start big. Like no one says, wakes up one day and says, I'm gonna steal $25 million. No, it happens in small bits over time and just gets worse and worse and worse. Lastly, is this overconfident. We all think, I'm more ethical than they are, it won't happen to me. And this is actually a very dangerous attitude to take, because when you have such confidence in your own ethics, it means that you're not stopping and thinking about the potential consequences or the perceptions of what you are about to do before you do them. So these are examples of some of the biases, organizational factors, and situational influences that can lead to unethical behavior, right? And I love this quote because I think it says it all. Situational influences have more to do with unethical behavior than a person's character. Under the right conditions, good people, and I mean all of us, can be induced, seduced, and initiated to act unethically. I'm sure we've all read about someone acting unethically in the newspaper, and we think to ourselves, oh my God, I would have never done that. The thing is, we don't know what the circumstances or situation that individual faced, which resulted in them making the wrong decision as opposed to the right decision. So here's our next case, and a good one too, I hope, a true story. Let me go back. What do we do with that? All right, here we go. Okay, so your boss, a fixed income portfolio manager, is attending an investment conference. During dinner, an analyst from Glitch Ratings mentions to your boss that his colleagues are working on an impending ratings downgrade of APAC Corporation bonds. Since several of the portfolios your boss manages contain APAC bonds, he calls you at home and tells you what the Glitch analyst said, and then instructs you to sell APAC bonds from all client portfolios when the market opens. The next morning, you sell all APAC bonds from client portfolios. You then call your broker and tell her to take a short position in APAC stock. Have you done anything wrong? A, no, because you are following your boss's instructions. B, no, because you owe a duty to your clients. C, yes, because you should not have sold APAC bonds from client portfolios. Or D, yes, because you should not have taken a short position in APAC stock. Give you a moment to think about it and vote. Okay, well, we only got 5 people. All right, let's get those numbers going. All right. All right, come on. Come on, let's vote. Okay, just for, in the interest of time, I'm going to just go on and the other votes can come in. So let me ask you this, and I'll come back to the voting results in a second. What is the issue in this particular case? Anyone? Well, I should say this, before I even ask you this, in this particular case, to whom do you owe a duty to? Do you owe a duty to your boss? Do you owe a duty to your firm? Do you owe a duty to your clients whose portfolios contain APAC bonds? So what's the issue in this particular case? And please, we'd love some response.
Good evening. This is Daniel Palmer.
Hi.
The issue in this case is acting on material non-public information.
Okay, no, all right, because an analyst, the credit rating firm's impending downgrade is material non-public information. So may I ask, what did you do? What did you say, sir?
Sorry, I never knew that there was a second part. What I did say was C.
Okay, so you would not have sold the bonds from your clients' portfolios.
That's right.
Do you think your boss would have been very upset with you? And what do you think how your clients would have felt if their bonds drop in value? Don't you owe a duty to your clients?
Yes, I do, but I don't. I mean, at the end of the day, I can't act on non-public information. So material non-public information. So I know my boss will be upset as well, but that's just the case.
Okay, all right, thank you very much. I appreciate that. Now, 40, and I appreciate people who said B because you owe a duty to your clients 4%. Now, who said D? Yes, because you should not have taken a short position in Apex stock. Why is that? Okay, so here's the issue. I would imagine that the reason why people said, well, you shouldn't have taken a short position is because you're acting on material non-public information. So again, here's the contradiction here. It's all right to act, what this is saying to me is that it's all right to act on non-public information as long as it's to benefit your clients, but it's not all right to act on material non-public information if it's going to benefit you personally. Is that kind of what you're saying?
Well, not really. I think the issue again is that the right answer, or the answer that we will put, probably isn't there, because I think both C and D are correct.
Okay, all right, yes. But I think that, no, and you're right, but I think C, if you answered C, then you probably wouldn't do D, you know what I mean? But many people feel, and again, I just say this in general, that it's all right to do something that perhaps stretches, that's perhaps unethical, if it's done for the benefit of the client, but it's not acceptable to do anything unethical when it's going to benefit you personally. And that's really what this sort of case highlights. And the issue is, sometimes, as the gentleman answered sooner, even if you know that your clients are going to be damaged if you don't act, it's just something that you have to do rather than breaking the law, right? Or rather than acting unethically. Anybody have any additional comments? All right, we will go on. So I like this cartoon. It says, run this by the legal department, but run super fast so the ethics department doesn't see it. And this sort of reinforces my earlier comments about there being a difference between the law and ethics. There are a lot of things that are legal to do in our industry, but nevertheless are still unethical. So I also want to stress the difference between compliance versus ethics. Since the financial crisis in 2008, every single major global financial institution and bank investment bank, etc., has doubled or tripled the size of their compliance departments. Compliance people are very smart and capable people. Yet, every time I pick up the Wall Street Journal or the Financial Times or whatever, I still see people acting at these firms, many people acting at these firms unethically. So as important as compliance is, more is needed than just compliance. What really is needed is encouraging employees to behave in a way that is consistent with the organization's values and missions. We want employees, in creating an ethical culture, not to ask, can I do this? We really want employees to ask themselves, should I be doing this? You know, compliance people really focus upon making sure that employees comply or follow with rules, regulations, and procedures. They don't, it's not their job per se to ensure that people go beyond that and really live up to the values and missions of the organization. So here's our next situation. Let's just go back here. All right, you have recently been hired by a sovereign wealth fund to manage an emerging market real estate fund. The current portfolio manager, who is retiring, hires local sub-advisors to help find and secure investment opportunities in these countries. Although the sub-advisors have little investment knowledge or experience, they are familiar with local laws and regulations and have close relationships with high-ranking government officials and regulators. The substantial payments that the portfolio manager has made to these sub-advisors cover their deal fees and other expenses they incur to obtain governmental and regulatory support for the sovereign wealth fund's real estate investments. As a result, the sovereign wealth fund has made a number of large and successful investments in these countries. The portfolio manager has reported these payments as operating expenses to the sovereign wealth fund. The question is, should you continue these payments? A, no. B, yes, because it is acceptable to hire sub-advisors to assist in finding and securing investment opportunities in foreign countries. C, yes, because the sub-advisor payments are legitimate expenses to ensure the success of the investments and to protect the fund. D, yes, as long as the sub-advisors keep these payments confidential. Give you a moment or two to read it over and vote. Should you continue these payments? All right, let's see where we are. Okay. All right, so let's see. Let us see. Okay, 78% said no, and 29, okay, 71% now, and 29% of you said yes, either B or C. Nobody said D. So is there, let me hear from anybody who said B or C. Yes. I agree. It is acceptable to hire sub-advisors, very much so. And sub-advisor payments can be legitimate expenses. But why would you say no?
I think part of the issue might be that I think that the nature of how the question is written gives the impression when they speak about close relationships with high-ranking government officials and regulators, it does give the impression of, or it gives an immediate impression of some sort of bribery or some sort of improper behavior. So I think to the extent it's not, then B or C become acceptable. But I think the immediate sort of feel, I suspect from the question is that that may be the suspicion.
Okay. Anybody else have a comment? Okay, so here's the issue, and you are exactly right about this. There is nothing wrong with hiring sub-advisors. No problem whatsoever. It's fine. Sub-advisor payments, as we said in C, are okay. What you don't want to do, there should be no reason to keep them confidential if everything is above board. You know what I mean? If it's all legal and ethical. Also, in the case, it says these sub-advisors have little investment knowledge or experience. However, they are familiar with local laws and regulations and have close relationships with high-ranking government officials and regulators. That, to me, is similar to what the comment was. This suggests that these payments that these sub-advisors are making may perhaps be bribes in order to get these real estate investment projects accepted by governments and by regulators. So really, what this individual needs to do, you need to do, if you're taking the portfolio manager's place, is to do a little bit of research and to do a little bit of investigation to, in fact, find out who these sub-advisors are and where these payments and to whom or these payments are going to, because it could be that this portfolio manager is breaking the law, because I know in the United States it is illegal for a US citizen to bribe a foreign official or a foreign government official or regulator. So yeah, this requires a little more investigation before you decide to continue the payments. Any additional questions or comments? All right, let's move on. So I want to talk about some fundamental ethical principles. And not only are these ethical principles globally accepted, they're also relevant in not just the investment industry, but also relevant in the accounting industry, in the legal profession, in any profession. You know, first principle, client interest must come first. Second is it's important for us to maintain our independence and objectivity. And not only just to maintain our independence and objectivity, but also to maintain the perception of our independence and objectivity as well. We should always strive to avoid conflicts of interest. And if we can't avoid a conflict of interest, then the best thing to do is to manage it. And how do you manage a conflict of interest? Through number 4, full and fair disclosure, so that clients will then have an opportunity to make an informed decision. Actually, your client and or your employer have the opportunity to make an informed decision. In this day of social media, Instagram, Facebook, LinkedIn, preservation of confidentiality is even more important. Not only preservation of your client's confidentiality, but also preservation of your employer's confidentiality as well. Fair dealing. When I say fair dealing, I mean you should not treat one client or group of clients beneficially while disadvantaging another client or group of clients. And lastly, whenever we're conducting investment analysis or making investment recommendations, it's important for us to use reasonable care and prudent judgment. Okay? Fundamental, globally accepted ethical principles. And quite frankly, our code of ethics and standards of professional conduct really embody those 7 globally accepted principles. So here's our next situation. Again, another true story. I'll tell you what happens afterwards. All right, so you're a fixed income portfolio manager who works as part of a team that invests the assets of large institutional clients. The members of your team tell you in confidence that they plan to resign from the firm to start their own investment management firm. They invite you to join them, but you decline. You know that their actions will at least temporarily affect the performance of your clients' portfolios, but you decide to say nothing to your superiors. Your actions are A, okay, because you are respecting the confidentiality of your colleagues. B, probably okay, because turnover is a commonplace occurrence that is to be expected. C, probably not okay, because client portfolios will be affected when they leave. Or D, not okay. You know, I do have to say, while the voting is going on, one of the reasons why I enjoy doing these workshops and using cases like this is because you really never know how people are going to respond. And you get such different responses with different groups and with different stakeholders, it never gets boring as a result. So let's see. Switch to live polls. Okay, wow, we've got a great distribution here. This is what we're going for. Okay, does anyone want to make a comment about why they voted in the way they did? And again, no right or wrong answer here. Anybody want to make a comment? All right. Well, let me just say that in this particular situation, in this situation, you really are, as we say in the US, between a rock and a hard place, meaning you're dead if you do, you're dead if you don't. So it says 35% of you said that you would not say anything because you are respecting the confidentiality of your colleagues. I get that. So let's look at what would happen. Let's suppose you work on a team with 9 other fixed income managers. So Friday evening at 5 o'clock, all 10 of you go home, and Monday morning, you're the only one who shows up. So your boss is going to think 2 things. The first is, how come they didn't take you with them when they started the new firm? But then he's also going to think, you knew that this was happening all along and you didn't say anything to me. Do you think your boss is going to trust you after that? All right?
Or Mike, before you go on, Donna's colleague made a very interesting comment that we should leave was acting in the best interest for our clients. So I'm not sure if Donna would mind us unmuting and giving us her perspective. Donna is look up to in the industry.
Well,
Donna?
the statement itself, can you hear me?
Yes. Yes.
Yeah, the statement itself is pretty straightforward because it is a dilemma. There are, as Dr. Macmillan says, no right answers. But in choosing, that's where I would lean towards something that would protect my clients versus protecting my colleagues.
All right. I got it. I got it. Now, may I ask, what was your answer?
Probably not okay. C, I think it was.
Okay, probably not okay because client portfolios will be affected. So let me ask you this. So I talked about the okay answers. Let me talk about the either not okay or probably not okay answers. So let's look at this scenario. These colleagues of yours, they obviously think highly of you because they're saying, psst, psst, we're starting a new firm. Do you want to join us? And you say, no, that's all right. I'm not joining. But then what do? You turn around and tell the supervisor, they're leaving. They're leaving. And what's going to happen? This supervisor is probably going to fire these fixed income managers that day because he knows or she knows that they're going to start a competing firm. And so your colleagues who thought so highly of you when they invited you are probably going to really resent the fact that you, quote unquote, ratted them out and told the supervisor what they were doing. Would you agree?
Yes, but in a perfect world, if we were in a perfect world, what we would do instead is explain to them the impact on the client of keeping the confidentiality. And they really should have a responsibility to disclose that they're forming a competing firm. So if they think that highly of you, maybe you have some sway in letting them instead rat themselves out.
Okay, so here's my question to you. I've given you choice A, B, C, and D. What would be your answer E as the best approach to take?
Basically what I just said, if you have come to me in confidence to say 9 out of 10 of us is going to leave the company, client portfolios on the day you leave will be affected. Either we won't be able to execute the way we would want to execute because one person, if we need 10, then one person is not going to be able to handle whatever is going to be required on that day. So explain to them that, in the interest of the clients, And in fact, if you're going into that same field, then you should be so minded that you're thinking about the interests of the clients and therefore act in a way in which, I mean, maybe you don't want to give the boss too much lead time that you're leaving, but certainly you do not show up tomorrow.
Okay.
Kind of thing.
And thank you very much. Good response. Anybody else?
Sorry, Dane wanted to come in. Dane, want to go ahead? Dane Broadbow?
Oh no, I think Danette's response was actually appropriate. I think as Dr. Macmillan said, I think the confidence is important, because the truth is that it's not information that you'd have necessarily been otherwise privy to. So it's not that you got information in the regular course of business that you're required to disclose, but there is a better, less mechanical way of going about it, which I think is what Danette would have outlined.
Yes. I'll tell you what happened in the real life situation. This individual knew that whatever he decided to do would not be satisfactory overall. So this individual went back to his colleagues and said, if you don't tell the supervisor that you're leaving within the next 3 or 4 days, you will leave me with no other choice but to do it myself. So he was faced with the problem, and then he turned around and put the problem back on his colleagues by saying, you need to tell, and if you don't tell, you leave me with no other choice but telling. How does that sound? All right. So I have a couple more comments. I see we got about 5 minutes or so left. So I'm just going to say, I wanted to say a couple of things about rationalizations. And we use rationalizations provide us with justifications or reasons for not taking the right course of action. Oh, in the case of the files, oh, she's being treated unfairly. Oh, needs this as the sole supporter of her family. These are rationalizations. They neutralize ethical intent by reducing the negative effect that accompanies performing an unethical act. So that's called guilt. We think we're more ethical than we really are. When we do something that we know we shouldn't be doing, we feel guilt. So we got to think about something to justify why we did what we did, to sort of get rid of that negative feeling. To justify behavior that is inconsistent with our own opinions of ourselves. Again, that's that attitude of we believe we're more ethical than we really are. And then to change our perception of a situation or social environment to defend or excuse our behavior. So, I love this quote. There's never been an act done since the beginning, from a kid stealing candy to a dictator committing genocide, that the person doing it didn't think he was fully justified. That's a mental trick called rationalizing, and it's done the human race more harm than anything else you can name. Some common rationalization: everybody else does it, so it must be okay. That's the way they do it at the firm down the street. If we don't do it, somebody else will. This is the way it's always been done. Doesn't really hurt anyone. It's not a big deal. He or she deserved it. It's not my responsibility. And this last one, I want to be a team player. I want to be loyal. If you hear yourself or anyone else say any one of these statements, you need to stop and really think about what you are about to do. So I'm going to leave you here with this. How do you resolve ethical dilemmas? Well, first, it's important that you acknowledge that there is an ethical issue. And sometimes we don't see the ethical issue. We see the emotion. We see helping someone. We see unfairness, but not the real ethical issue. We need to determine who's faced with and owns the problem. In both cases of the files, whether you are actually copying the files or just observing that individual copy of the files, that is your problem because you are seeing someone do something unethical and it's your responsibility to report it or whatever. Gather the relevant data. In the case of glitch ratings, the information that you had really was material, non-public information. When I say test the wrong versus right parameters, ask yourself, can I do this? Is this legal or is it illegal? When I say test for the right versus right paradigm, ask yourself, is this ethical? Should I do this? Should I not do this? Apply the resolution principles. Think to yourself, am I putting my client interests first? Is this going to affect my independence and objectivity? Am I fully and fairly disclosing everything my client needs to know to make an informed decision? 7, investigate other options or compromise. In many ethical dilemmas, your choice doesn't have to be binary, meaning do it or don't do it. There may be ways to finesse the situation so that you don't have to rely on the do it or don't do it. There may be other choices available to you. Make a decision and then reflect on what you've learned from the decision. Because here's the thing, we are never going to make the right decision 100% of the time. Let's hope we make the right decision 60% of the time. But whether it turns out to be right or not, there is always a takeaway. There's always something that we can learn from what we've done to help us make a better decision in the future. And I'll leave you with this last quote from Warren Buffett, who said, I want employees to ask themselves whether they are willing to have any contemplated act appear the next day on the front page of their local paper, to be read by their spouses, children, and friends, with the reporting done by an informed and critical reporter. Now, one last thing, if you can see on your screen, there is an ethics training feedback poll that you can complete on your phone. It's anonymous, I don't see it, but please do complete it because we want to know how we can we want your feedback and any suggestions perhaps on how we can make this workshop even more effective and impactful. So with that, I am going to stop sharing my screen and I'm going to turn it over to Hugh.
Yeah. Okay, thanks, Mike. I would just say one thing, not to prejudice the feedback, but that last case in terms of the team,
yeah,
I've left a lot of the participants with an ethical dilemma because we are closely knit bunch in the financial sector, and persons tend to the friendship span institutions. So sometimes person give a heads up when they're going to be making a big move, whether starting a firm or something in that kind of something similar to that. So I think when the next instances arise very soon, persons will just have an ethical dilemma in terms of determining what to do. Do you give the employer a heads up? Do you send them up kind of give them a vague warning, or do you do nothing? So time will tell.
Yes.
What I would say in closing, and I speak on behalf of CFA Society Jamaica, is that the cases that you brought to us today are definitely relevant. For industry practitioners, especially as we go through new season. You presented last year, and the industry has matured even more. They're more complex products. So the cases you took us through, quite interesting, quite relevant. And so I just want to thank you. Yesterday I indicated that you're an honorary Jamaican, and I will say that again. So the next time you fly to Jamaica, you won't need to do any COVID test or anything. You just give your name and you just come straight through immigrations and customs. I'm telling you that in advance of for the workshop next year. Want to thank the participants for being attentive. Also want to thank our president, Brian Fraser, who started us out and giving us some sobering stats in terms of trust. One person sent a note in the chat asking if the mechanic were those Jamaican mechanics, because they didn't like the fact that investment practitioners were being, ranked so closely with mechanics. But I think I don't think those are Jamaican mechanics, otherwise the French would have been wide out. The last thing I would say is that we just want to start the way Narisha started, by thanking Jamaica Securities Dealer Association and the president, Stephen Gooden, who has once again endorsed this workshop and has actually made it possible in terms of, drumming up support. And we just say to the participants that the material, the workshop would have been recorded. We send the recording out, as well as any resource materials, so that your colleagues who weren't able to attend along with you, at least they'll be able to listen to it on a Saturday while having a cup of coffee, or while stuck in traffic. So just want to thank you all for attending and being so interactive. And Dr. Macmillan, once again, thank you on behalf of everyone, as well as Nicole Lee, Dr. Macmillan's colleague, who stayed in the background but also played a role. So thank you all on behalf of CFA Society Jamaica, and have a good afternoon. Bye-bye.
Okay, thank you. Bye.
So this